You're at a disadvantage when you ignore half the information. And if you only look at technicals or only look at fundamentals, that's exactly what you're doing. Without a doubt, you'll make better decisions if you combine both of those together. It's not about overcomplicating things. In this video, I'm going to show you the simple way that I combine both of them together when I'm making decisions for my clients. So as we always say, fundamentals tell us what to own, and the technicals tell us when to own it. So it comes down to what versus when. I'm going to show you step by step what we look at. Now, this doesn't mean you need to spend hours and weeks diving through everything that a company's saying when it comes to their fundamentals. There's a quick filter, a scan that you could use that we feel will give you enough information to help check those boxes. Not saying that the analysts that really dive into every single metric that a company is putting out is useless, but we think it could be overkill. And as always, we don't like to overcomplicate things. So the main things that we look at when it comes to fundamentals is the company's revenues and their earnings. So you can look at revenues is simply the sales, how much business the company is generating. Companies report these numbers quarterly, okay? And they compare it to the prior quarter and they compare it year over year as well. We look at revenues and we look at earnings. To explain this really quick and easily, revenues are sales, total sales the company's generating from selling their product or service. The earnings is their net amount after they have salaries and research and development, investments into new products, new facilities. This is their net result, how much the company's profit is at the end of the day, starting from their revenues. Revenues show if a company is selling more and more products, and earnings is really how efficient the company is at managing their financials. The most important thing that we look at in terms of these numbers is their growth, okay? We always say that growth leads to returns. What we like to see is quarter over quarter, year over year, consistent growth. For me, the higher the growth is, the better off the company is doing. And we don't want to see one quarter where the company had 50% earnings growth if it was just a flash in the pan. But if you look at the best companies out there, those are the ones that are consistently growing their revenues on the top line and their earnings, which are their bottom line numbers, quarter over quarter, year over year. A rule of thumb, I want to see double-digit earnings and revenue growth for a company. The sweet spot for me is 20% or more earnings or revenues or revenue growth. So that's really what we want to look at when it comes to the fundamentals. Another thing that you can look at as well is any catalyst that a company has. A catalyst can be a reason for why you own it. Back in 2009, this is going back a long time, that's when Apple first came out with the iPhone, a revolutionary product. We all use one every single day, probably more than we should, but that was a catalyst for Apple back in 2009, and that really drove the stock for the next decade and a half. Another catalyst you could think about is AI and chip companies right now, how everyone's adopting artificial intelligence in their business. That's a catalyst. That's part of fundamental research as well. I want to make sure that their revenues are good and growing, means that their sales are good. I also want to make sure that they're not wasting their money, that their earnings per share are good and growing as well. Then I also want to make sure that there's a reason that can drive it going forward. Like I said, the iPhone, or maybe it's a new policy that the government puts into place or changes rules. Or AI right now has been a major catalyst for these tech companies as well. So I think if you look at those things overall, it could help give you a pretty good picture on whether something is worth looking at further, parts of the market, individual stocks, or if it's worth avoiding, okay? And that's always where we start. So once we go through this and we check this off, and now we know areas of the market to focus on, individual stocks to focus on. And one thing I'll add, this is a great way to find the strongest areas of the market. If you look at tech, you don't want to see one company that has good sales growth, good earnings growth. If you see across 8, 10, 12 different companies in the same industry that are all growing their earnings and their revenues, that's probably a good sector that you can focus on. Then what we shift to is the when, is the technicals. The technicals, we're talking about the price charts. Every stock, every fund has a price chart that corresponds with the daily, weekly, monthly action of the stock trading up or down. This is what's telling us when we should step in and buy something. Make no mistake about it. Something could have excellent fundamentals and check the box as far as the what, but the market could be selling off for one reason or another. Maybe because of what's going on in the Middle East, maybe during COVID in 2020. The technicals are going to tell you maybe it's not the best time to be putting some money to work. Things that we look for in the technicals, we're looking at first and foremost, what is the trend? We like to buy things that are in an uptrend. Not saying it goes up every single day, but over a reasonable period of time, it's trending higher. This is also going to be looking at volume. We like to see that on the up days, the volume is greater than on the down days. It just means that there's more participation when things are going up as opposed to when they're going down. Also, if something has been going sideways, there's things we can look at. For example, a big influx of volume coming in when the stock is sideways could tell you that some big institutions or hedge funds are starting to build a position inside of that stock or fund. So we look at the trend, we look at volume. There's a number of other technical indicators that I don't want to get into now and get too deep in the weeds, but the technicals is really the roadmap of when you should be buying things and when you should be selling things. So this is a great framework that you can use. You don't have a team of analysts helping you make decisions on what you should buy or sell. Neither do I. I do all my own homework and research myself. I start with my filter, the fundamentals, make sure those boxes are checked. Then we turn to the technicals to guide us on when we should be acting on things. To sum it up, don't overcomplicate it. Look at the fundamentals, make sure the company's growing, and then look at the technicals to know when I should be buying this, when I should be selling this, or maybe it's time just to avoid and watch something further.